Employing Wyckoff techniques, Wyckoff methodology for identifying and participating in very long-term trends that can last 2, 3, 4, or more years is the topic for the day when we talk about campaign candidates. This is a workshop. We're going to start this discussion, introduce these concepts. There's more to do than we can cover in the time that we have together in this episode, but we will keep going on this because it has so many unique characteristics, attributes in the Wyckoff method that works so well for this very long-term investment orientation to selecting and buying and holding stocks, ETFs, and other instruments. Hello, my name's Bruce Fraser, and this is Power Charting. And welcome to my Wyckoff friends. Thank you so much for all the great feedback that you give me in the comments. And I so appreciate you watching Power Charting. I love to put these together for you. I want them to be primarily educational. I'm most interested in us developing skill sets, improving, enhancing our abilities, nuancing our capabilities with the Wyckoff method to ever higher levels. That's my purpose, my goal. This is what we taught for years and years, and let's just keep going with this. And I hope that you really enjoy what we're going to do today. Okay, today's agenda: campaign concepts, a workshop. Big causes create long-term trends. So this is what we're going to focus on, is how can we use the Wyckoff methodology to identify big causes that produce large effects. So a cause is an accumulation type structure. An effect is a trend, and trends can take a very long time. Why are we interested in this? Well, there are, in addition to being able to buy and hold stocks for long periods, make a minimum of buy and sell decisions, there's also some other things that are useful about this method, and that is tax and transaction efficiency. So when you make a purchase and intend to hold that for a number of years, there's really very few decisions that get made. It's about managing the trend as you go along. The other part of this is tax efficiency. What is the tax efficiency of this long-term campaign concept? Well, we have the opportunity to defer taxes indefinitely into the future on capital gains because we are holding off and selling this instrument, the stock, ETF, etc., out in the future somewhere in an unknown time period. But if we can put this off for 2, 3, 4 years, and we're generating gains in the portfolio from these appreciating positions, then that becomes extremely valuable. The other effect is reducing taxes because we are converting gains into long-term capital gains, which have reduced tax consequences when the ultimate day comes that we are selling these positions, if we ever sell them. We also are going to talk today about using point and figure horizontal counting technique methodology for estimating the potential for these large potential appreciations, these long-term trends that we are attempting to identify and participate in. Now, the thing about campaigning is that it's not easy to do, that these long-term periods of accumulation can go on longer than we think. So we'll talk a little bit about that. And we may get out and enter into a position a few times before it finally catches hold into its long-term uptrend. Also, sometimes a period of trading is a period of inaction because there is no accumulation process that's taking place. A stock can go sideways simply because it's in an industry or has a business plan that is not appealing to investors, that doesn't have growth potential over a long period of time. And so sometimes a big trading range is not actually an accumulation area. So let's keep that in mind also, and we'll try to minimize the potential of being in those stocks that are just, hanging out, not doing anything, not going anywhere. Ideally, we want to be in these accumulation areas when they're ready to mark up and go into this long-term uptrending area. Now, the idea here is that big accumulation areas produce big advances. So when the distribution period finally comes, an overbought condition, that is the time when we, along with the composite operator types, are going to be selling our positions ideally. But also there are times when it appears that we're going into a distribution area that in fact it's just a long-term pause for a reaccumulation before another uptrend begins. So you've seen this life cycle model before. Here is an accumulation phase, which in this case, you can see this goes over a long period of time. Here is the lower accumulation. Here's after the breakout. And this can be years and years of sideways trading before that uptrend begins. Now, chart is somewhat truncated, but it shows the effects of a trend that goes on until distribution sets in a downtrend. But these periods of sideways action can in fact be just that, reaccumulations that can take sometimes a long time, months and months, possibly even a year or more of sideways trading in a position that you own with a profit in it, and it's easy to become discouraged. So we'll talk about the psychology of holding on to long-term trends. Some of this we'll do today, some of it we'll do in the future. So here you can see this uptrend. We showed this chart last week. Go back and watch last week's program on reaccumulations, and that is called the reaccumulation paradox, because sometimes it seems that a reaccumulation may actually be a distribution, which are these two schematics on the right, but in fact it's just a preparatory phase for another advance. A stock will have a big trend, get ahead of itself, and then go sideways for a period of time. This actually can be a great period if you didn't get into the base at as a base goes into its markup. That first reaccumulation period can be a fine place to initiate or add to holdings. So we will move on. And so here is two schematics of reaccumulation areas. Now, these are from blogs that I've written in the past. I've referenced them here on the slides, but also if you go to the description, below the video on the YouTube page, I will put links to these blogs so that you can just go click right into them. So this is an accumulation with a spring. This is an accumulation with a last point of support, which is a higher low. These are just variations on a theme. The whole idea here is that the accumulation here, let me go here. The accumulation period is a period where stock completes a downtrend, Stocks go into downtrends because they are in weak hands. We want the sponsorship of these large institutional, very savvy composite operator types that are accumulating these shares because they see a huge potential for a long-term uptrend to occur. Here is an example. This is SHAK back in 2018. You can see here that stock is going from weak hands to strong as the public and weaker institutions are jettisoning the stock, getting out of it, and then the CO wraps up all or absorbs all the supply. Remember, this is a supply-demand relationship. So the supply becomes scarce as the CO types lock up the available float, and then it becomes very difficult to buy the stock. And when it becomes sufficiently difficult and enough institutions become interested in the idea of this stock and what it's doing, the stock starts to move up easily and effortlessly into an important new uptrend. We can measure the potential extent of the advance in these stocks by doing horizontal point and figure counting. Very unique, very old school methodology. It's been around for, gosh, 150 years longer, and it's a tried and true methodology that's not very widely employed. So now let's go back here. The whole idea about accumulation is to build our positions at the after the final testing phase, phase C, and then on the uptrend, which is phase D, from the bottom to the top of the accumulation area. And this area becomes quite important. We'll see examples of this in a minute. And so there are tactical places to build positions on the way up in phase D, and then when it is out of phase D into a new uptrend, which is phase E. So this is the point when capital can work the most efficiently and effectively. And so we as Wyckoffians want to focus on the phase C, phase D, phase E area as the areas where we want to get busy and build positions. So you can read more about this in this blog here. Now let me pause for a minute. I'll be right back. So here you can see a horizontal point and figure count with the counts. There's two segments or two periods areas that are counted in this base we just looked at in SHAK from 2018 going back to 2016, a substantially large accumulation structure. We could potentially call this a campaign. If we take the whole width of this area, it counts up to 123 to 130. And here at the beginning of 2021, SHAK touched 135. So here is, and this is from a count line at $37 and a low at $30. And so this is a substantial advance with an accumulation area that shows the potential for a rather large move. This segment worked quite well also as it went up into this zone and then corrected and then continued on to higher prices. So here you can see this is the SMH, semiconductors. You can see this very large area. I didn't do a point and figure on this, but 2018 to 2020, this is a very large accumulation type structure and a beautiful persistent uptrend that's occurred in SMH, and the really nice move in the semiconductor stocks became overbought here. It's in a trading range now. This may continue. I'm showing you this because I have some other examples for you. Here is what potentially could be a reaccumulation type structure. You can see the relative strength. We're going to talk about relative strength and campaigning in a future episode, but now you can see the relative strength is waning, which is not uncommon in reaccumulation. So we would position SMH down here towards the support area and on the rally phase, testing in the rally phase up. And now we would watch closely. This is not a place where there's edge for purchases, but it's potentially a jump up and out, and a backup could be a great place to initiate or add to positions. So here's the stock I want to talk about. This is interesting because this chart goes back to September, the structure in Nvidia. So March to September, and you can see this reaccumulation area with a big potential count, big potential structure here, reaccumulation. And here there's a climax, automatic reaction, range bound condition, support and resistance, nice sign of strength here, up thrust here. Here's a spring type action which starts the uptrend, an excellent place to potentially put on or initiate trades, and then it rallies up and pulls back. One of the things about the a method like a campaign method is that you have a lot of ebbs and flows, and so you're tolerating a lot of pullback. But the key here is that, let's say that this testing area of that low becomes your entry place. Well, so far you have not returned back to that area around $500. Here is a point and figure chart. This is one of the things that we would look at to identify a campaign candidate, because we look for a 3-to-1 potential for appreciation in a campaign candidate as a rule of thumb. So here I have two counts. In here, this count, the smaller one, and the count line is at 495 with a low of 465. This counts up to 1,040 to 1,070. So that does not produce the 3-to-1 reward risk phenomenon. It's not really 3-to-1. It's threefold the count line. So in this case, we have here a $540 count line across, and we take the whole width of that area that we just did, and you can see this count at 540 goes up to 1440 to 1515. So that is really, really close to having a multiple of three times the accumulation area at 545. Doesn't quite get there, but it's pretty close. Now here, AMD has been a weaker stock in the semiconductor space, and I only show it to you because you can see the dynamics of Nvidia and how strong it is, and how it went up and made new highs, pulled back, and AMD is somewhat languishing in here. So this is something that we would compare different stocks in the group against each other to identify emerging leadership. Now, here is an interesting, in this case, a commodity, and this is crude oil, continuous contract. And this is a most interesting chart because here is, and this really demonstrates the potential of doing long-term point and figure work, is this count here, which goes down to $8 on crude oil and counting over to 2016. So this is a 1, 2, 3, 4, 5-year structure from here to here, and potentially it could even be over to here. But initially we take the more conservative count. We have a rather dynamic advance here, which is now upwards of around $70. So this chart was done on January 2nd. And so here, this area counts up to 230. And I know that's not something that we want to hear if we're trying to fill up our car with gas, but this is a count, point and figure count, that has the potential to go from a low of $8 up to $230. That is the dynamics of campaign point and figure counting, is that the point and figure horizontal counting methodology can actually give us a way of estimating the potential for how far a stock, or in this case, a commodity, can go up. Will it go to this level? Don't know. Have no idea. It's not yet above this resistance area of the 2018 high here, but the next level is in the area of 112, 114. And so there is room for this to go up to a higher resistance level, but that is just potential. And so this kind of potential would become immediately attractive to someone with a campaign orientation. Now, here is Oil Services ETF OIH, and this Oil Services formed a reaccumulation structure right along in here. I took 3 counts. Now, this is a what we call a modified count. And so it's 3-box reversal and 3-point scaling. And so you can see here, if we take these smaller counts, they count A and B here and here confirm each other, but we can take the entire reaccumulation structure, goes up to 306, 342. And so there is potential here. This is not technically a campaign level advance, but it does definitely show that the oil service stocks are supporting higher prices, which confirms the crude oil chart that we just looked at. They're supporting each other. Let's put it that way. They're not confirming, but they are supporting. Here is the chart, the vertical chart of the area we looked at. This is the same point figure. So you can see how, look at this really incredible advance from October to the present. So this group has become quite hot after really being out of favor for a very long time. Now, here I'm going to show you some other long-term point and figure charts, and we'll end on this, I'm sure, because we're running out of time, but we'll keep going. I've got many more charts to show you. This is the Standard & Poor's 500 ETF, SPY. This particular, let's blow this up so that you can see here. This is the accumulation structure of the bull market that started in 2009. So this count across here, substantial count from early 2008 to 2009, had a count that went up to 246, 245, 225. Then we have this larger count area, which has the potential to be a campaign count. So look at this. The count line is at around 110 area. It counts up to 410, 370. And here is a recent price at 423.46. So we've actually thrown over the top of this area. And oftentimes when you reach the objectives like this, it will stop, pause along the way. This does not necessarily mean that distribution must set in, but it does suggest that when you get up to an area that is a long-term count like this, very big campaign count, that this count, and it definitely had a 3 multiple potential and achieved it. I mean, amazingly, we're talking about 110 back here on the SPY, that you'll often go into some kind of a reaccumulation or trading range structure. And only then can you really determine whether or not it is a distributional in nature. Now here's the Dow DIA ETF, and here is a very large campaign structure. I'll let you look at these so that we can just keep rolling along here. But this large count, which is a jump out and a back up, and look at the number of years here. You're talking about 1, 2, 3, 4 years of accumulation structure and a magnificent uptrend. Well, the uptrend actually started here, but the completion of the accumulation occurred on this backing up action, and taking this count all the way back 4 years of data produces a count that goes 310 to 350. Recent count objective 344.92, and so very close and within the range of the count objectives. And also take note, these counts, as we just talked about with the SPYs, these counts did stop the advance. And so you can see here, this count also, they both stopped the advance for a period of time before it was able to then resume its uptrend. So now the thing that I would like to add here is that, is it possible that this is actually accumulation all the way back to 2001? And so there's substantially more count that is available to be taken in the Dow Jones averages. This is the reason we don't want to just conclude because we have reached an important objective that the bull market is necessarily over. So this is a very large count potential, and this demonstrates how you can see in a point and figure chart the incredible potential for really substantially larger moves. So don't think that this necessarily stops the bull, ends the bull market, but it could stop it for a while as reaccumulation sets in. And then here is a monthly chart going back to 2009, monthly bars. And here is Wyckoff trend analysis structure here, with the trend line being drawn on these points along the way up. And look, we are now into an overbought condition. And I think that 350.37 was the high print for the DIA so far. Okay, and so finally, we're looking at the Qs, and here is a huge accumulation structure that goes all the way back to 2001. And let's see, so you can see here 2001 to 2011, that's a 10-year accumulation. Amazing. Now, the part that's so dynamic here is that you have a count $20 on the Qs at the low, and in the neighborhood of $55 here at this upthrusting action in the backup. So beautiful structure, has all the elements to it, a jump out and a backup. This is why when you get the backup area, this is a great place to be looking to build positions, because the accumulation is complete here. And so look at this count, 325, 290 high range, and this count is all very large count, very aggressive count. Look, we've just gone above that, thrown over to 340. And with that, we're going to keep on with the subject. I have a lot more to show you. I'm so glad you were here, and we will see you next time.